Good evening. It's Vijay here. Welcome to the weekend commentary. Today is 4th May 2025. Please note I'm not a SEBI registered advisor. This weekend commentary basically talks about what's happened the past week and what we can look forward to the near future. So generally, it's a little bit of macro thinking. So last few days, actually last few weeks, there have been a lot of narratives being floated in the market, right from the Liberation Day of 2nd of April when Trump made those announcements on tariff, and then from April 22nd about uh, the war on the horizon between Pakistan and India, and how markets have reacted. So all of them you will see have lots of narratives, but what is the reality? So today I would like to focus on this topic: narratives versus reality. So just what is narrative versus reality? Is generally there is one narrative set by what I call the opinion makers, the fin influencers who come on TV, business channels, and who write in Facebook, LinkedIn, or Twitter, and conduct spaces, and they take upon themselves as experts, and then they talk about some narrative. Many a time, narratives are different from what reality is. And today, as we stand here in first week of May, it's extremely important to know where we are on the reality rather than the narratives. Narratives from the last 10, 12 days has been that the market should fall down because there are a lot of uncertainty. This is I'm talking of, focused on India, and therefore, sell and go away is the mantra, and that's what we are hearing it day in and day out for the last 14 days. So let us see what the institutions did in the last 14 days from 22nd April till Friday of May 2nd. FIS actually net bought 23,000 crores. Okay, this is narrative where there is an imminent war between India and Pakistan is the narrative, but the FIS decided that whatever may be the narrative, the reality is unlikely to be that. So they bought 23,000 crores. DIS, that is mutual funds, bought 10,000 crores, which means 33,000 crores were sold by retail investors, AIFs, PMS, corporates, and maybe what we call them as operators, that's ultra high net worth individuals included. So 33,000 crores has been sold by the rest of the gang who set the narrative, but quietly it has been absorbed by the institutions. Now let's see how the Nifty has behaved. So this is the blue line here. This is where the 22nd April. If you look at it, actually Nifty has slightly gone up. So despite one day it fell down very badly, but the next day it bounced back. So it has been, floating around in a flat terrain, you could say. So Nifty has not been really affected because it has been bought. The Nifty stocks have been bought by the institutions. Then let's look at Bank Nifty. Bank Nifty also has done the same thing. The next day it fell after 22nd April, but then Friday it almost went close to 22nd April date, and it has closed lower slightly because of the impending results of State Bank of India and Kotak Bank. So Nifty and Bank Nifty are almost flat. Now let's look at the micro cap index where the retailers are there. So it's down by 450 points since the 22nd of April. So there is heavy selling in micro cap index and in small cap index. This is micro cap, you could say ultra net high worth investors. Operators will be sitting in micro cap down by 450 points. In the small cap, you have lots of PMSs and AIFs which focus on small cap. Small cap index is down by a whopping 750 points. So while the Nifty and Bank Nifty are held steady, the small cap and micro cap have significantly come down because they are the guys who are the operators and the retail is selling. Now let's look at what's happened in the US. Now, US, I would like to take the narrative about the Liberation Day when Trump announced after 2nd of April, that was at the closing hours. So on 3rd of April, there was a big crash. It followed up with 4th of April. This is S&P 500. And then you see what has happened. After 2 days, the market has taken off there, and today S&P is trading much higher than the Liberation Day announcement. So you see, the narrative is that higher tariffs are bad for the stock markets. It was bad for the only 2 days as far as S&P was concerned, and today S&P is much higher than what it was of the closing of April 3rd. April 2nd closing is when he announced the extra tariffs, the reciprocal tariffs, and but see where it has gone up. So the narrative was it should be weak. Reality is it is strong. So if you look at Dow Jones also it has crossed the Liberation Day announcement. It is trading in the positive vis-a-vis Liberation Day announcement. Then Nasdaq, if you look at it, Nasdaq has significantly gone up over the Liberation Day announcement. So US markets in general have gone up much higher than the Liberation Day announcement of reciprocal tariffs. So clearly narratives were set which said bearish narratives were set, but reality is something else. So I would like to end this with saying, what is this? This is what we call the cognitive dissonance theory. The cognitive dissonance theory talks about when people are faced with information that is inconvenient to their ego, they respond by turning a blind eye to it. So the information clearly is that there is no problem as far as the markets are concerned, but the people are not willing to believe that the markets are going can go up.